Good morning, David. How are
Hello,
you?
hello, good morning. I'm fine. How are you?
I'm doing fine as well. Well, we apologize with our viewers this delay. Good morning, David. Because we had some technicalities again. However, we have
We,
improved our
yeah,
um, our fonts. We have improved a little bit our delivery for our
yeah.
watches.
We tried our best yesterday. We had everything set up, but the OBS has its own personality, and we woke up with surprise that all the settings were gone, so we had to do it on the go. We expect that the audio and video it's clear. And today we have a really interesting topic. Last week we were talking about investing, and well, there was this topic that Professor Hubert told me he was going to explain in detail today, which is mutual funds. So yeah, today I'm really quite excited about this because I have no clue about mutual funds and I actually want to learn.
Excellent. Oh, before we start with our mutual funds presentation, I will have to say that first of all, I will have to show you a disclaimer. Whatever we're doing here is for education purposes. So actually, if you need to invest some funds, look for professional advice. Yes. So whatever we say here or whatever example we take is just for educational purposes. We don't want you to advise to go to certain particular places to buy different instruments of investments. Yes. So this is just to clean our hands, just in case somebody wants to invest some money in in mutual funds in the future and they lose money. Um,
Yeah.
okay, so let's go to the presentation for mutual
Hmm.
funds. And this is something very straightforward that I have prepared for you. And first of all, what's a mutual fund? Um, it is a collection of money, it's a pool of money from different investors. So let's say my capital is 1,000 euros. You have 3,000 euros. Uh, your girlfriend has 5,000 euros. We put that into a fund, and there is a fund manager, professional manager, that will decide how to allocate this fund into securities. The idea is to expect some return. Um, what you are buying in this fund is proportionally of the money that you allocate in the fund. Let's say that the fund value its equity, okay, it's 100 million euros. So your piece of the fund allocated is in proportion of the 1,000 euro or 2,000 euros or 5,000 euros that you have participated in that fund. Any question?
Well, yeah. So for example, if you have mutual fund, it means how do you even get that? How do you even get to buy one? Like, okay, you got some, but where do you buy it? Do you go to the internet? Do you have to go to a special bank? How do you even manage to get one of those?
This is coming in the example that I'm going to show you. But the first thing
Hmm.
you have to do is usually banks, they offer you mutual funds.
Okay.
There are some other financial institutions that they open a fund where
Mhm.
they get this money from different investors and they have the strategy to invest. So there are certain type of different funds. You can have aggressive funds that they invest only in stocks. You know that stock market is variable, so it varies a lot. This is what is called aggressive in business and in finance. You have a more conservative type of funds that they try to preserve capital. So in this case, they
Mhm.
will invest in bonds or short-term securities that offer a income fixed income in
Mm.
terms of that they pay certain amount of interest for the amount that somebody invests. And you can have a mix between these aggressive and conservative. So you can have a proportion of 95% fund invested in stocks or 95% of funds that are investing into fixed income securities. But you can have a mix of 40 60, 50 50. That is depending on the fund and depends of the um, risk profile of the investor.
Okay. And okay, for example, as a beginner, do you think that a mutual fund is like the best way to start investing if you have never started before and you don't know anything about stocks, or is it like a better way?
Definitely, it's a very good way to start because you are, let's say, advised by a fund manager. And here the issue is
Mm,
to find a very good fund manager that
okay.
that is looking for your interest and not for their interest. And here's something something that everybody that wants to get into mutual funds should know. We are going to the example. Now, right now, you can check any website that offers mutual fund, but usually it was before in the past, it was something called like the mutual fund brochure. So in this
Mm,
brochure, all the information of that specific fund was offered, and then you can find information related to the description of the risk factor of the fund. That means the composition of how this money, this total amount of money, is invested. Yes, so
mm,
the funds can have a different strategy depending on the times where we are investing because the environment changes and they can change a little bit the strategy. But if you are in an aggressive fund, let's say 95%, 90% of that fund is going to be invested in stocks. But if you are much more in a conservative fund 90 or 95% is going to be invested in fixed income security, say bonds or certificates of deposit. Then you need to know about the past performance of the fund. So then you see how the fund has varied during a certain period of time. Then it's going to be a description of the type of investment contained in the fund. If they're investing in stocks, you know that different sectors, economical sectors, they have different risks, and it's also depends on the country. So you can have funds that only invest in um, banks in Europe, or you can have a fund that invests in a portfolio of banks in the entire world. Okay, but however, you are not diversified as an investment instrument because you are, let's say, investing in a fund that only invests in banks. Okay, so the idea is that you also understand how is this diversification in different instruments in different sectors and across different let's say regions in the world. In that sense, you can be very very well diversified. Also, they will provide information about dividends, the distribution of the dividends, and about taxes. Okay. Um, in this case, if they are investing in stocks, these stocks they pay dividends. Some of them, okay, they pay dividend at the end of the fiscal period, or they pay advanced dividends during a fiscal period. That depends on the strategy of the company. But that's going to increase also the amount of the fund. But remember, what you owe is when you buy a fund or when you deposit your money in a mutual fund, what you owe is a participation of the entire fund. So you own a piece of this fund. You don't own a share. You own the proportional amount of that share according to the size of the fund and according to the amount of money that you have invested. Taxes also, because taxes varies from region to region, country to country, and you should know how taxes are going to be um, applied in case you withdraw some money from the mutual fund. So there are funds that allow you to withdraw the money at any time during the fund, or they only allow you to withdraw your money at the ending period of the fund. Yes, so there are a lot of specificities that people should know about mutual funds, and this is why I will always recommend to read the brochure and read the small letters at the bottom of the brochure.
I have a
Um,
question then.
yeah,
For example, you say it's really important to know and to read the brochure. For example, I can imagine that they have this type of small letters or in which they say, okay, if you retire the money before certain limit, you get paid a fee or a fine. Is that the case? Like, is it really worth it? Do you get your money saved to inflation better, or you combat inflation better if you do something like this?
that's a very good
Like,
question, and that's related to the process of buying and selling shares, okay, or
mm,
selling participations of the fund.
mm,
First of all, when you get to a fund, the fund manager is going to charge you a commission, is going to charge you a fee. And
mhm,
they will require sometimes, depending on the requirements of the fund, that you keep that investment for a certain amount of time at least. It could be 30 days, it could be 6 months, it could be a year. But if you make withdrawals or you make larger allocations, if allowed by the fund, in the same fund, probably they are going to charge some commissions because there are some administration fees. Okay, so in this brochure, all the information about the fund has to be very explicit, and usually
of
they are
course.
regulated by the banking regulator in any country. Yes. Um, then we have all these descriptions of services provided to investors. This is like the obligations of the fund manager towards the investors, and the information about how often the fund portfolio changes and which are the fee charges. Okay, so you know that there will be some fee charges. Let's go to an example. Let's go to our next section of our presentation. Yes, I made a rookie mistake. I, just- I we forgot to put the count up just to know how many minutes we are dealing with this presentation. However, um, this is an example, and this example, yes, I don't want to make any advertisement. This is something I'm just familiar with. Many of you know that I'm Peruvian, so I'm from Peru. So more or less, all my knowledge, my resources, let's say 60% of my resources are based in Peru, including some investments to now, also my knowledge. The other 30%, I would say, comes from European fans and Spain, Germany connections. And the other 10%, let's say, comes from place that I live now in Denmark. So as you see, I have commented about three, four different region countries that they deal with different currencies. So in Peru, for instance, you can invest in soles, the new suns, yes, let's say, um, or in dollars. So we, as a investment instrument, accept any of these two currencies. Uh, and that's related also to the environment of the same country as well. In Spain, Germany, we can invest in euros, yes, and in Denmark, you have to invest in crowns. So that's a decision. As for me, is that I have many options to invest. So I would recommend that if you are managing different currencies, invest your money in the place where that money is. Okay, so if I have soles, I will invest soles in Peru. If I have euros, I will invest euros in Spain or Germany. And if I have kronas, I will invest these crowns in Denmark. Why do I say this? Simple. You have an exchange rate return that it can be positive or negative. So if I want to transfer my funds from Peru to Denmark, I will have an exchange rate lost. Um, the banks are going to charge me for exchanging that money. First of all, I will have some fees to transfer the money, and then I will have some losses for exchanging the money from soles to dollars to crowns. Yes, and then I'm starting not 100%. I'm starting, let's say, at 95 or 92% with the money I have in the location where I invest. So there are all these small expenses that make our return lower when we get into investment. So we need to know all the process just to know what is our starting point in terms of our investments. Yes, so let's
Or
go to these Interfondos. Yes, Interfondos, this is a mutual fund manager. I know them because I've used them in the past. And here, for instance, they have. I'm so sorry that this is in Spanish, but I can translate. Here you can see all the different type of funds they have. We clicking here, they are sending us to another page, and here you can review all the different type of funds they offer. Okay, you see here conservative, or here you see special funds, and they vary according to the risk profile of the investors. Very nice tool. I like to see they have a very nice tool that is useful tools. They have a performance graph. Yes. So let's say they ask to you in which currency you want to invest, soles, dollars, dollars. I will decide for soles, as I explained before, and then they have different type of funds that you can decide. The one that I like is this stocks. Yes, stocks, simple. Yes, in soles, in the currency. And then what I can do here is I can check how the fund has evolved in the last years. Okay, so let's yeah, they only allow me to do it for 3 years. Okay, so I will do this from July, and let's check. Okay, and here I can see how the fund has performed in the past. So what usually the mutual funds try to do is to replicate, yes, or duplicate an index. I don't know if the audience know about indexes, but usually in every country there is a stock market exchange, and there is an index related to this stock market exchange. So some mutual funds will try to replicate this stock exchange index, or some other funds will try to create a portfolio of investments for any specific type of investor.
okay, and ain't it better, or is it more secure or less secure to just buy, an index? I mean, buy an index portfolio than getting some mutual funds?
You can buy an index by yourself, but what it means is that you will have to review what is the composition of that index. We can do a trial just online. Here we go to Yahoo Finance, and what we do is we look for any index that you want, and it is like
Let's say the
IBEX
standard
35.
or yeah,
IBEX, it's not here.
IBEX is for Spain.
Spain, exactly, but I don't know what is not here. So let's go to here down. This is futures. This is the problem of doing this online. Okay, it's here. It's here now. It's here now. Okay, and then you need to look for the stock exchange to where this index belongs. In this case, it belongs to the MCE, that is the stock exchange in Madrid. Okay, you have different type of IBEX, and then here it says components, and you can see the different components of that index. It means that all these companies are composing that index, and this is more or less how mutual funds are built. There is a proportion of participation of the 100% invested in Meliá Hotels. There is another proportion invested in Banco Sabadell, and they have a different weight. And then at the end of the day, they calculate how much they increase or decrease, and from that figure, they will make a calculation of how much the index in this case has increased or decreased. Mutual fund acts exactly the same. Okay, so and this is why we have here this graph of the evolution the, the performance of the fund. If we go back to our game, cash flow game, so the idea is that we buy cheap and we sell expensive. Yes.
Mm-hmm.
So if I say, okay, look, I'm not going to invest all my wealth there, but a little proportion just to have additional cash to build a saving, some savings that help me to move to a different investment type of investment. We see that. I would like to see this before, because all the funds, when they start at 100, and from this 100 they start increasing or decreasing. So what it means is that we have some history here that we cannot analyze because they are not offering the information. I know how to get the information, but that's going to take another 10 minutes, and this is what we don't want. We only have 1 minute and 20 seconds to finish. But however, if you see the evolution of the fund, yes, this is connected with the economics of the country. Remember, this fund is based in Peru. What we can do here is we see what is the lowest point, what is the uppermost point. But remember that this fund started at 100, yes? And there are many comments that I can make, but if you know the timing investments is very important. Yes. So if you more or less have an idea of how this fund has evolved, you more or less know when you can enter into the fund. Not because you have money, you have to enter right now. Don't put your savings, don't make rash decisions. Just think about what you can do, and when is the right timing is called. When is the right timing to invest your money. Well, I think I will leave it here, but remember, we didn't wanted to advise of type of funds that you can invest. This is just for information education purposes. So
Yeah, at
remember,
the end
if
of the
you
day,
want to do some investments, invest in what you understand. Don't invest ever in what you don't understand, and look for some professional advice that probably can help to you to match the type of instrument that you are invested in and your risk profile. This is very important, that you know your risk profile. Yes, you know more or less what type of investments you would like to have, safe or a little bit more risky, and then somebody can help you to identify the proper type of investment. Yes. So this is all for us related to our talk. Yes, and I hope it was well explained, and we would like to hear some comments from you.
yeah, we will be glad to hear comments from everybody in our LinkedIn website, and we expect you to get into our website and get to know a little bit about business training and development. Thank you very much, Professor Hubert, for the explanation about mutual funds. And next week we have to talk about, well, there was this list of type of investments that we have to do. What do you want to talk about next week?
That's something very interesting, and
Mm.
I like businesses. Yes, and I had my own construction company in Peru back before I
Mm.
moved to Spain. I was involved in some projects. I'm involved in reforestation projects right now. But something I like to do is to listen to your story, because I heard that you have your own fast food restaurant in Colombia.
Yeah, in Colombia, I have a franchise, a Mexican food restaurant that I created like 5 years ago. It's called Azteca, and it's a really interesting concept. It's Mexican food with electronic music. So yeah, we can maybe talk about business next time.
Yeah, let's talk about business, because I think that a lot of people would like to know in what type of business they can invest. So I can make a short introduction of the different task somebody has to perform. It's called due diligence before you get into 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 business. But using your experience as an example would be very let's say educational for our audience on LinkedIn. Yeah, that's going to be very interesting to listen.
Okay, so let's talk about business next week. Again, Tuesdays, 11 a.m., unless OBS is trying to mess with us, but 11 a.m.
Okay, perfect. Excellent. Thank you very much for the talk, and I'm very looking forward to see you next Tuesday.
Okay. Thank you very
Bye
much for the
bye.
explanation. Bye bye, Professor.